before starting with adding this update. Know that his coin has a very high risk. It can recover more than we expect. At the same time, it can be worth noting, so don't invest all your money, and even investing, do this only with a plan. The best way how LUNA can get increased is by burning the coins, and at the same time building a stable system that can work with no futures or connecting to UST. Burning coins could bring the price to high targets. Same time, there is some news about Tron support to LUNA, but we need to confirm this clearly. Again, it's not wise to invest full money, but for example, those entering a $50 amount, what they can miss could be a possible trade to see how this later will work out. Nobody can tell you, or know where the price exactly will go, because this does not depend only on trade technical analysis, but also if the company will get out of this or not. Depending on the trading technical view, there is still hope for a backtrend. In this view, it shows that 0,01 are a possible target on the long term, but if there is burning, it can happen in the short term and can increase to higher numbers.
On 9th May, after nearly 18 months of steadily holding its value against the US dollar, the so-called stablecoin Terra UST became unpegged. The uncoupling triggered a response that would ultimately crash not only UST and the Terra LUNA cryptocurrency, but also contribute to Bitcoin and the broader crypto space seeing a major downturn that it is yet to fully recover from. UST is an algorithmic stablecoin, which means it is not backed up by dollar reserves in order to remain pegged to the fiat currency. Instead, UST uses its partner coin LUNA to maintain its value, with each UST token minted resulting in the equivalent of LUNA being removed from circulation, and vice versa. In an effort to bring UST back to parity with the US dollar when its price began to drop, LFG used its vast reserves to buy up huge amounts of UST in an effort to force up the price. In doing so, vast amounts of LUNA flooded the market, resulting in a near total price capitulation.
Big Terra investor Mike Novogratz finally speaks out on UST/LUNA disastrous fallout after an uncharacteristic silence of over a week. Galaxy Digital founder and CEO Mike Novogratz has finally given his take on the devastating fall of LUNA and UST. The billion-dollar crypto-focused merchant bank had significant exposure to Terra's LUNA token. Besides, Novogratz has explained what the LUNA-inspired tattoo he got in January of this year means to him. In his memo, Novogratz notes that the global macro backdrop this year has been generally brutal for all risk assets, with growth stocks down 50% to 70% and leading crypto assets Bitcoin and Ethereum retracting 58% from all-time highs. Altcoins have also lost around 80% of their value since their peaks. UST's growth had exploded from the 18% yield offered in the Anchor protocol, which eventually overwhelmed other uses of the Terra blockchain. The downward pressure on reserve assets coupled with UST withdrawals triggered a stress scenario akin to a run on the bank, the Wall Street veteran wrote. He reminded readers that central banks are unwinding a massive liquidity bubble created by pumping trillions of dollars into the financial system in an effort to fight the economic fallout of the pandemic. The Galaxy Digital CEO believes this macro backdrop put a lot of pressure on Terra's native token LUNA as well as the reserves allocated for backing the UST stablecoin. At 9.45 ET, LUNA changed hands at $0.000190, representing a 7% gain on a 24-hour basis and was the only cryptocurrency with over $1 billion market cap flashing green on Forbes crypto leaderboard. The rest of the cryptocurrencies traded in the red, with smart contract coins like Atom, DOT and ADA leading the way lower with nearly double-digit losses. Ether, the cryptocurrency powering Ethereum, the world's largest programmable blockchain, traded 5% lower at $1,980, while market leader Bitcoin nursed a 3% drop to $29,300. A renewed risk aversion in traditional markets likely weighed over cryptocurrencies, including coins associated with smart contracts. The U.S. stocks gapped lower as downbeat results from retailer Target Corp validated the Federal Reserve's plan to fight inflation with monetary tightening. The Terra LUNA, LUNA, crash has roiled the cryptocurrency markets, pulling down the price for Bitcoin, BTC. Terraform Labs, TFL, and Luna Foundation Guard, LFG, sold off their Bitcoin in an effort to stabilize the associated Terra USD, UST, stablecoin. That has affected sentiment across the crypto space as investors have responded to the LUNA coin news. When USD unpegged from the US dollar on 9th of May, UST redemptions massively inflated LUNA supply, driving the price down by 99%. Having traded at an all-time high above $100 in early April, the LUNA price collapsed within days, plunging to $0.003385 on 12th of May. As of 19th of May, the LUNA price remained flat, trading at $0.001337. The LUNA token is primarily utilized for governance and staking. In exchange for benefits from transaction fees, users stake LUNA to validators that record and validate transactions on the blockchain. It has no value other than its use to create and redeem 1 UST. The LUNA coin price in US dollars largely traded below $1 from its launch in 2019 until it took off in early 2021 with the broader cryptocurrency market rally and the growing popularity of decentralized finance, DeFi, apps. Quan tweeted on 11th of May that the only path forward will be to absorb the stablecoin supply that wants to exit before $UST can start to repeg. There is no way around it. We propose several remedial measures to aid the peg mechanism to absorb supply. This includes endorsing a community proposal to increase minting capacity to absorb UST faster. With the current on-chain spread, peg pressure, and UST burn rate, the supply overhang of UST, i.e., bad debt, should continue to decrease until parity is reached and spreads begin healing.